Welcome. I'm Ira Epstein with your financial market wrap-up for the sea of red behind me as the marketplace dealt with the FOMC, terrible ISM data, and so on today. And the time right now for May 1st, we're about 4:42 p.m. Central Daylight Time. Bull markets need to be fed, and the Fed came out today doing just what we thought. They didn't do anything, but it's the way they didn't do anything, which there was nothing wrong with it, that disturbs the market. This market's trying to build in that the Fed's going to do a rate cut. Some people think that the president talking about the Fed, maybe he'll nudge them on. The Fed made it clear they don't even listen to the politics. They're independent. But they also said they don't see a reason to cut or raise rates right now. The data doesn't say to do that. The market took that as a slight negative today, so we got a correction in the marketplace. Okay. More important to me, believe it or not, was Dr. Copper. A lot of people look at copper as a bellwether for economies, both the U.S., Chinese, so on and so forth. That's a market that went down 10 cents a pound. That's a monster drop. Gold didn't drop like that. It was the industrial metals, the silver, the platinum, palladium. They all got hit and hit hard. When you take a look at a weekly area chart of closes for the S&P, you're down 0.63%, not even a percentage point for the week, down 18.5 points. It's a blip, no more than that. Yes, we're off the high close of 2941.5 by about 18 points. When you look at the chart action on a daily, though, a little bit more important. Why? Because it's a key reversal day, it's an outside day down, it's a bearish sign until today's high is broken again. This didn't just happen at any point. This happened at an all-time high in the market with a big reversal to the downside. That puts the market now with a higher high, lower low. It again stepped out of its uptrend. And these trends have been interesting in how they've held. You certainly broke down right here. And at this point in time, if we take a look at it, we had the same type of action. That's a key reversal. That's an all-time high at that point. And when you take it out, that puts something else into play. So why should it change? I don't think it should. Until today's high is taken out, the market has made a near-term high. It's that, my definition. When I add to the chart moving averages, the first support comes in at the 18-day average of closes. I call that the line in the sand. Now, you haven't even hit it since last in March. You didn't hit it at all in April. Back here, it found some support. The question is, will it find it again? What about resistance? Well, the resistance has been clear. We've shown you the Bollinger Band. That has been the resistance point. It was here, it was here. And a lot of people go, these bands, blah, blah. Well, when you go back and you look at them and you understand the importance, I think it's where pros often take some money off the table. That doesn't mean they're not buying again if they think it's bullish, but that is a pretty strong resistance point. And when you go there, you see it. Here's something that's very negative. You've lost the embedded reading for the first time in a very long time. All that means to me is that price should return to the 18-day average of closes. It missed it today by a tick, so it can easily do it. Doesn't mean it has to. But if it gives ground, it might have enough momentum to carry the market to the lower Bollinger Band of 28.76. From here, that's what, 45, 48 points. That's a lot. So we'll see what happens. In the NASDAQ, you lost your bullish momentum as well. In fact, this one lost it with both numbers. The odds of getting both numbers back tomorrow are very small. Anything in the world can happen, but it's very small. Again, the 18-day average comes into play. If you had a big break, maybe the lower Bollinger Band comes in play, but I'm saying this is the first number. Was this a new all-time high? 28.67 1/4. And if we come here, 28.79. So it's not. It's a reversal day, but not the same magnitude as the S&P. I'm looking to see what it does there. Is there any buy signal out of that in terms of lower highs, lower lows? I'll let you figure that one out, but the trend is down until you take out today's high. Momentum is turned down. The buy is still up because you're over the 18-day average. In the Dow, we went up today, hit 26,691. So if we come back to these highs, 26,689, So you got up to a new all-time high. and you had your outside day down. Again, I'm going to call it a key reversal. You had not had an embedded reading. The high did not make it up to the upper Bollinger Band. And now the question is, because you closed under the 18-day average, is the lower Bollinger Band going to come into play? Anyway, I cut the indices I've covered so far. All have lost their upside momentum. Now the question is, what do they do on the downside? When I come over to the Russell, it's a little different. You still have the higher lows and the higher high. Yes, it paid really good attention to the Bollinger Band, and the 200-day moving average is what supported the market along with the 18. If they give ground, because you did get a reversal from an overbought area, maybe the lower Bollinger Band comes into play. So none of the charts are bullish anymore, which means the VIX is getting a pop. And the question is, did the pros sell into it late in the day? I don't know. But that's been their pattern. Selling the upper Bollinger Bands and then trying to cover at the 18-day average, or selling the lower band and trying to get out at the 18-day average. We'll see if they did that. You're overbought up to that number. It's such a narrow number here, this band. I think you can get a bit more of a pop if the stock indices decide to let go. Let's take a look at the bonds yesterday. This is the bonds. You're stuck in a pattern where at this point, you had higher lows. I think you see that. You already had the higher highs. You had closed over the 18-day average of closes. If the market carries through, which is something I wouldn't know, I mean, you're guessing when you're trading, right? The upper Bollinger Band might be the resistance point. It's what the market did, and look at how it backed away from there. It made a challenge right against it. You got to 148.12, 148.13 is the number, so I think it's close enough to say got pretty close to hitting it. You exactly hit it in the 10-year and backed away from it. So I'll stay with my theories that the pros at these numbers often take some money off the table. Doesn't mean they're reversing short or any of that. If they were bullish with the uptrend as defined by higher lows, higher highs in the bias, they might have stepped out there. When we come to TLT, why should I think it's any different? You have the higher lows, higher highs. You just missed hitting the upper Bollinger Band. It's 124.54. 124.45 was the high today. That's not close enough for me to say it hit it. It's one thing you miss it by a tick. It's another thing by a dime as I see it. So I think that's still in play. Momentum up, trend up, bias up in the market. That's the resistance. Now in the dollar index, you had been in this pattern since mid-April of higher lows, higher highs, hitting the Bollinger Band. Then you spiked right over it. Well, eventually you pull back in. That is the idea of a Bollinger Band, that 95% of the time you'll trade within the band. So you get ahead of it, and that's okay. But what did we get right here? We had a key reversal. You made the highest high of this move. It might have been a contract. I didn't even check. You closed back down under everything under the Bollinger Band. That puts into play the potential if prices start correcting. Maybe the 18-day average has the support. Resistance will still be the Bollinger Band top. The market starts coming down. This is yesterday's action. Today you sliced even through that low, but by the end of the day, you had found your support at the 18-day average of closes and bounced up. I think the market stepped out of its uptrend. I think the longer term is still friendly, but the market lost its way on the daily chart because now you got a lower low and a higher high. So what does that do for me in the Eurocurrency? Am I getting the mirror image? I didn't quite. Today's high was 113.11. This is 113.16. So it didn't take out a previous high. It certainly made it to the 18-day average of closes, which was 112.88. That's where I'd expect to see resistance. Market finished 112.40 and a half, so the market did finish off. Now, what you've got to be careful of, obviously, is keeping the bears if they're going to keep supporting the resistance point. In other words, adding the resistance. That 18-day average is still live, as I call it. In the British pound, yesterday was the day where I think you took the market out of the downtrend. You had a nice downtrend going, and if you took out this 130.36 level, be careful, you took it out. Now the question is, if it pulls back The 18 and the 100-day average could be support levels. Momentum has turned up. If it's going to run, maybe the upper Bollinger Band, wherever it comes in, will be the resistance. That's still very much part of the story that I'm seeing in this. In the yen, remember, it's a strange time in the yen right now. You've got the Japanese national holiday, so this whole week is sort of a week where everything's thrown out of kilter there. Then the change of the guard and the emperor and so on. So the market's still safe haven. It didn't close higher today. It tried to make a run for the upper Bollinger Band, but now it's pulled back to the 18-day average. One of the things I often look for is how often is it hitting it. And if you take a look, 1, 2, 3, 4, 5 days in a row for all purposes. So that's become an important number as the market's searching to see, will the support against it hold up? You know you're out of the uptrend if you take out this break low right here of 89.55. It would break the pattern. In Bitcoin, I call this a market that is now searching against, again, the 18-day average, trying to figure out what to do. The swing line is down with lower highs, lower lows. Momentum had been pushing itself down from right here. You had your break in it, and now you're flattening out. This is going to be, to me, an important area in this market. We then get to Brent versus WTI crude. Today, you surprised the market in the WTI because what you did, I'm going to come to this chart first. You added 9 million barrels of oil. Where'd this come from? The API number was nothing like that, but it kept the pressure. Lower highs, lower lows, so we're in a short-term downtrend. Resistance is 64.26. If you don't come back through this low right here first of 62.28 and you were to get over 64.75, you could capture the shorts. But in the meantime, because the trend is down as defined by lower highs, lower lows, and the close under the 18-day average, the 64.26 should be the resistance point, and that's where the bears have to defend the market, not let it get over 64.75. When I come to the Brent, notice how the 18-day average now 4 days in a row, you keep hitting it. The market is looking to see what's it going to do next. For the meantime, lower highs and a lower low is in place. It is negated because you closed over the 18-day average. They're fighting each other, so you have nothing. Momentum has been pointing down. It's not picking up a lot more, but if you start moving down under that 18-day average, certainly if you took out 70.59, it'd be interesting to see, does the market then have the momentum to get to the lower Bollinger Band? Let's flip it. Let's assume you don't take 70.59 out and you get up over 72.78. The upper Bollinger Band goes into place. So you're at a real interesting point on this chart. In the gasoline, you've had a pattern of lower highs, lower lows. You got back to that 18-day average, and for all purposes, that's a number you seem to be fighting at. Even if you rallied through this old high, you'd end up with a lower low and a higher high. I don't see this market getting bullish from here temporarily. If you closed under the 18-day average, you'd probably embellish the bears in the market. Last in the nat gas. What happened here is you had an embedded reading. For those of you that follow me, you know embedded means that the slow stochastic numbers have been going sideways under 20. When you lose that, it's often a precursor to the market and the 18-day average making a run at each other. The market backed off from that a little bit. This was Monday's action. Yesterday it started getting up towards it, even closed lower. Today right to the number, and that's where it stopped. So as far as I'm concerned, the market has finished off that part of it. Now the question is, does it decide to trend or not? You closed at 262, right on the 18-day average. I can't tell you the bias is up. I can tell you the trend is up, and momentum is up in the market. So we'll see if you can get any more of a rally. You know, one of the things I do each morning, I'm talking 6:15 in the morning approximately, I record my morning subscriber video for you. And in that video, I cover 40 futures markets and 5 ETFs. The charts look like this. I'm not in the video, thank God. You wouldn't want to see me at that hour. But what I'm doing there is I'm able to sit and record and throw at you ideas for your trade day. And unlike these videos, which are public, this is a subscriber video, so in it, I cover not only the markets in this exact sequence, but I'm able to get much more flexible. People ask, do I put out specific buy and sell? You betcha. That's where you're going to get my specific buy here, sell there. Here's what'll change if I see it. Why do I do this? Well, if you're like me, sometimes you got your hand like this on your chin. Should I be going into that? Do I want to do this trade? Blah, blah, blah. The idea here is to throw ideas at you to either solidify or to throw that idea out. I don't know what you're thinking. I know what I'm thinking. So in this, the idea is to start your trade day off with some thoughts. Is it expensive? Flat out, no. To try it out, it's 26.5 cents a day. Your commitment is for one 30-day period, not a month, one 30-day period. If you don't want to continue, you just cancel. It's not automatic. You can do whatever you want to do. If you want to roll it, you can. It's $15 every 30 days after that. It will only cancel if you go in and you cancel it on your own, or you tell us in any manner, hey, I don't want to continue with it. Not a problem. You might want to switch, instead of paying $15 every 30 days, to a 1-year subscription, $156, which is $13 a month paid up front. It's all your call. But to find out more, you can talk to my staff. You can go to our website, www.iraepstein.com, under research and education. Go to Morning Subscriber video. It explains it all. You can also click up here to get to our website. It'll take you right there. I'm Ira Epstein. You have a good day. I'll talk to you tomorrow.